Claire here from My Mortgage, and I've got your interest rate update for the beginning of October. Now, I've delayed this one until after the OCR review on the 8th of October because it was such a big one, and the Reserve Bank delivered. They have dropped the OCR by 0.5%, which is pretty significant, and already we're starting to see banks respond. What that means is that interest rates are now dropping, and they are a little bit cheaper than they were a couple of weeks ago. We are still seeing some drops filtering through the banks. So at the time that you fix, it's really important to get up-to-date information as to what rates are doing because things are changing so quickly at the moment. Talk to us about what we're seeing out there and make sure that what your bank has offered for you is right for you and is the best rate on the market. In terms of outlook, what the Reserve Bank has kind of said is that they're expecting more drops. We think that these actually could be relatively significant heading into Christmas and then early next year. So the next review is the 27th of November, which is the last one for the year, and then following that is in February. So what that means is that the Reserve Bank might take some further pretty heavy-handed action to cut rates, which should stimulate the economy a little bit more because they're getting under a little bit of pressure with things like job losses and stuff like that filtering through into the economy and challenging a lot of New Zealanders, essentially. What is good news, though, for borrowers is that it is getting cheaper to borrow money. While the interest rate you're being offered is now getting to sub 6%, which is pretty awesome, the other part of it is serviceability. So if you're looking at borrowing more money or you want to do a refinance or look at some other options, it's now becoming a lot easier to do so. So the test servicing or the stress test rates that the banks use has now dropped by about 0.5% as well. And that's actually really positive for people who want to buy further properties, buy and sell, refinance, or make some kind of change to their lending. So if you are looking to fix, if you've got a fixed rate review pre-Christmas, please leave it to the last minute. Not something I always say. But what that means is that you will get the best rate on the day. Most banks are honouring the best rate, but some have slightly different ways of doing things. So check with us if you're not sure. In terms of actually how long you should fix for, short term is still pretty attractive. The 6 and 12 month rates have diverged a little bit. That is, the 12 month is now pretty significantly cheaper than the 6 month, which is kind of sitting still up here. But with the expected relatively quick rate drops that are coming in the next 6 months, I would expect that you'll still get some pretty good value out of a 6 month rate. A little bit longer being 12 months and being a little bit more certain, but also a very good rate and much cheaper. So there's a bit of a thing to toss up there based on your situation. Overall, we're really stoked. We're seeing rates move in a really positive direction for our borrowers and for our clients. So talk to us if you've got any questions. And at this stage, go pretty short, leave it to the last minute, and good luck.